So when it comes to technical analysis, we always say that price is the most important point when it comes to your decision making. The second most important point when it comes to your decision making is volume. And volume is important. Why? Because sometimes, or majority of the time, before changes in trends happen, you're going to see volume spikes. I'll repeat. Before changes in trends happen, you're going to see a lot of volume spikes, which represent accumulation or distribution of prices. So typically, the question I get asked a lot is, Javi, ano bang, what indicator should I use the most? People are thinking, should they use RSI, stochastics? I always tell them that before you even study any type of indicator, you should first be comfortable or practice a lot with price and then volume. A lot of our top traders upstairs don't even look at indicators. A lot of them who do very well just look at price and volume. The first step that you need to do when it comes to making decisions when it comes to the stock market. And that first filter that you want to go through is asking the question, what is the trend of the stock that I'm looking at? That is always the first question that you should be asking when it comes to making a decision, whether you're looking at Now, looking at SM Prime or any other company. So when we say trends in the stock market, there are only 3 types of trends. So there's no in between. Our boss would always say that it's either uptrend or downtrend. If you don't understand what you're looking at, it's more likely sideways. But when you're looking at a chart, whether it's a 1-year chart, a 5-year chart, a 10-year chart, a 5-minute chart, you can always categorize certain portions into 3 portions. Uptrend, downtrend, sideways trend. And if you want to be able to qualify each particular uptrend, downtrend, sideways, there are 4 qualifiers that we usually look for when it comes to identifying issues that are in an uptrend, a downtrend, or sideways trend. The 4 qualifiers are in an uptrend, which we'll be focusing, at least for this seminar. There are 4 components. You have a low, a high, a higher low, and a higher high. Normally, pag unang tingin mo pa lang, may kita mo naman kung uptrend or downtrend. But if you really want to be technical about it, meaning you want to make sure that the uptrend lines, the trend lines that you're drawing are actually valid ones and not invalid, then you need to have these components in place. You need a low, you need a high, you need a higher low. Obviously, it's a higher low because it's a low higher than this low. And lastly, you need a higher high. When you have those 4 components in place, then you have an uptrend. And the uptrends are essentially issues that you want to be participating in the stock market. At least issues that are starting their own uptrends. Obviously, you want to stay away from the one in the middle. You want to stay away from issues that are in a downtrend. You want to stay away from issues that have a high, a low, a lower high, and a lower low. And then lastly, we have a sideways trend where prices are simply moving along in a sideways manner, to put it simply. Now, can you make money in all types of environments? Yes, of course, right? Today I bought, or the past few days, I've been buying at least some stocks that are in short-term downtrends, right? As you learn later, we'll teach you about bullish divergences, which is a setup that is prevalent at this particular environment. But majority of the stocks that I also have are also stocks that are moving in uptrends. And my recommendation to you guys is this, especially if you guys are starting out. If you guys are starting out, you have a COL account, you're looking for ways on how to make your money grow more effectively. I want to start out by saying that technical analysis it's not very easy to do. In fact, if you look at the global standard in technical analysis in trading, the global standard is 85% of all traders lose money in the first 2 years. Now, I'm not saying that to scare you. Sabi ni Madam, I'm not saying that to scare you. I want to say that to put some healthy fear and to at least mentally prepare you. Now, I want to say that because I want to be real with you. I want to level with you. And I'm saying that because I've been teaching this for over 4 or 5 years now. And obviously, our goal is not just to share our knowledge and how we've made at least our money, but we also want to make it relevant for you so that you can go through the path of least resistance in making this work for you. And for me, what I would recommend, the first thing, if you're starting out and you want to try if this works or not, I would highly, strongly recommend that you stick within uptrends. Stick within uptrends. Because you can make money in downtrends, sideways trends, but from my experience, the skill level you need and the amount of time that you need to invest watching prices is much higher. Uptrend, at least you have the trend working with you, working in your favor. And this is actually something where if you're able to participate in a strong uptrend, in a strong up market, hindi ka na babalik sa mga downtrend, sa mga sideways. Right? Like if you were able to participate in maybe Macro Asia last year, or other companies like maybe DNL a few years ago, or even today, there are a lot of uptrending companies, right? Uptrending companies that I'll be showing you later on. But if you're starting out, and I know I'm putting a lot of time in this because this is important, I would highly suggest, especially if you have an EIP account or you have a mutual fund, I would suggest that number one, you start with an uptrend, and second, you want to start small. Especially if this is something that you've never done. You want to start small, so at least you can make the mistakes while they're small. So let's move forward. So we talked about the 3 types of trends that you can essentially, para multiple choice lang yan. Pag nakatingin ka sa chart, pipili ka lang A, B, C, uptrend, downtrend, or sideways, diba? So when you're able to find an uptrend, one of the things that you can do is to draw an uptrend line. An uptrend line is what you see here. An uptrend lines are drawn by connecting major lows or support areas. So I'm introducing a very important term right now. It's the term of support, which I'll elaborate more later. But essentially, when you have an uptrend in place, you identify an uptrend, low, high, higher, low, higher, high, higher, low, higher, high, then you can now draw a line that connects the lows of your uptrend. And that uptrend line will also be called your support line. Support line. Why? Because as long as that support line is intact, as long as it does not break, is the uptrend still in place? Yes or no? If the uptrend is still in place, are you still holding on to your position? Yes or no? Yes.